phenomenal accomplishment. So we have Martha Corral from our Aurora office, who is on the top 250.
Pandemic put a stopper to that, but this is our coming back to it. It's our second, and we hope to see you guys every year here and be bigger and bigger to spread the word about what it takes to achieve affordable, sustainable homeownership. And you guys are on the front lines of making that happen. I was talking to a gentleman this morning, and the first thing we said, the American dream of homeownership is alive. It's never going to die, and we're the ones that are going to keep it going. So having this event where we can talk about strategies to make that happen is so important. So thank you again to Freddie Mac. Let's give them a round of applause. And it doesn't happen without the lenders who actually put these products in play for us. So thank you to Rocket Mortgage for making this event happen here today. So let's give our friends a round of applause. So we have some VIPs. All of you are VIPs in my book, but there are a few people that I'd like to recognize. First of all, our two staff members who, when Nate and I said that we've been working for the last few months, it was really these two people that were doing all the work. So I'd like to, Lindsay, if you can do a stand up. Let's give her a thank you. She has tolerated all kinds of emails at like 12 at midnight. We working with her, so thank you. And also, all of the technology and all this coolness that's happening up here, live streaming coast to coast. Dottie, you can give her a stand up for us. Thank you for making all this happen here today. Do we have any other staff that I missed? Okay, but there's a lot of people behind the scenes, both with Freddie and Rocket, who helped make this event. So thank everybody in the planning. We're also thrilled that we have some dignitaries in the real estate industry here today. One of our speakers, they're going to speak later on today, but we do have the past president of the Chicago Association of Realtors, Martha Guzman. We also have past president of the Westtown Association of Realtors, past president of the Illinois Association of Realtors, first Latina to hold that role in the history of the association. Somebody who I admire, a friend, Loretta Alonso. Let's give her a round of applause. And Mike Gober, who is incoming president of the Illinois Association of Realtors. Thank you, Mike, for joining us. So he is the one realtor that is often confused with Kevin Costner. So I know a lot of people thought, wow, Kevin Costner. So if anybody asks for autographs later, just sign up for me because I'm going to pay some people. So anyways, it's great to have you. We also have our very own Bob Eby, who's past president of the Westtown Board of Realtors, and a tremendous voice in real estate and everything that goes around that. So let's give a round. And I also think, are you on the board? Matt Ridoff? Come on, let's give him, he just newly installed board member. And he can also do some, if I start to wean, he will come up here and do an Elvis impersonation to save the event and bring us back into it. So he is my backup just in case. So again, we're thrilled to have you here. We're going to have a great program. Soon we're going to hear from Freddie Mac and Rocket Mortgage, and then we're going to have two amazing individuals come up to give us a short TED Talk style speech. So that's going to wrap it up for us today. And Nate, anything else?
Oh, yeah. So one other person, I apologize, Mike Lulo, who runs our Addison office with Joan. He's sitting right here in the front. So, one of the things that Alex and I wanted to just start off with here is, at Century 21 affiliated, one of our philosophies with our agents is that we're lifelong learners. And so the process of learning in this business really never ends. And so it starts, obviously, when an agent walks in the door and they meet in one-on-one with our fine managing brokers and team leaders. And then we have a great education department that does live in-person training and supplements a lot of the things that are happening at the office level. And then we have a great online learning platform called Elm Hub that provides education opportunities for our agents. And I'm sure that after today we'll have this event on that platform so that those that could not join us could experience everything that we're going to hear today as well. But one of the great things about hopefully being past all this COVID stuff is that we can get back to doing live events. And so we had a great event at the beginning of June in Naperville, and we had a trainer come out from the Mike Ferry organization that talked about listings, and we had about 100 agents that joined us for that event, and it was a great opportunity for them to sharpen their skills when it kind of came to that topic. And we're bookending it at the end of June now with a great partner in Freddie Mac and Rocket Mortgage to bring you today's topic, which I feel, the headlines are all about housing affordability, right? Like this is a daily thing that we're hearing now with inflation and interest rates and how it's becoming even more difficult for segments of the population to buy their first home. And so I'm really excited for what Freddie's going to talk about today and what you as agents are going to be able to take back and use with your clients and be able to grow your businesses. So without further ado, I'm going to let Alex introduce our speaker from Freddie Mac, and we'll get this thing going.
Sandra, why don't you come on up here? Let's give Sandra a round of applause. So without further ado, first of all, I have to say, you were here with us 3 years ago.
Sure was.
And your presentation was amazing. And I know that this is even going to be even better, so I'm really excited about it. Also, I'm sorry to do this. There is a technical hiccup. We do have a clicker for you.
Yay.
So I'll take care of that.
You need to get me hooked up on the
Okay, so we're just going to have a few seconds to get this ready.
Quick minute. Yes.
Yep, okay.
Perfect. Thank you so much, Alex. Good morning. How's everybody feeling?
Great.
I actually grew up out in the country, so I talk kind of loud anyway. Do you guys hear me all right without a mic?
Yes.
Awesome. So I will leave that there. I am so excited to be here with all of you guys today. And what a beautiful day it is, right? Oops. All right, so again, greetings. I'm so excited to be here with all of you today. I am a longtime Freddie Macer, 25 years at Freddie Mac. Currently, my role is as an affordable lending manager. I work with our lender clients, planning strategies to help them meet CRA goals and outreach into communities of color. But I've done this is my second go around within Freddie Mac in this role. I was in it prior to us going into conservatorship. And so we had, all of us had to pull back at that particular point in time. But through all of it, that first-time home buyer, that LMI borrower has always been the one that is the nearest and dearest to my heart. So I'm happy to be back at it. I'm about 5 years back into the space. And even after coming to Freddie Mac, I actually worked in the primary market. I've been the originator. I've been the process with a closer. Done about all of it that you can do in the industry, but like I said, through it all, this is really my favorite piece. With Freddie Mac, we are 52 years old, and actually July would be officially the 52-year mark of us, and we have helped over 80 million people become homeowners, achieving that dream of homeownership. So, our charter is out here our mission is to promote liquidity, stability, and affordability in the marketplace, trying to stabilize communities of color. But we can't do it by ourselves, right? It takes a village. to make it all happen. You know, we can't do it without you. It is all about getting the information, the education to everyone in this space to make the dream of homeownership become a reality. Freddie Mac, you as the real estate professional, Rocket, the lenders, the appraisers, the attorneys, and it takes everybody, the housing counselors. We can never forget the housing counseling agencies because they also play a critical role in this as well in helping folks. So with this, let's talk a bit about the mortgage-ready population. And I'm going to start a little bit about home ownership by region. Midwest, look at this. Midwest has it beat across the country, hands down, right? The #1 rates of home ownership at 70%. And this is, the green is first quarter 21, blue is first quarter ending 22. So it dropped a little bit from last year, but it's still at the 70% rate, highest in the nation. Yay! Right? So, look at this. And the housing appreciation is still strong. I mean, Illinois, just a mere 13% appreciation year over year. Not too shabby though, right? But we're seeing, you know, all across the country, just crazy rates of appreciation. And it's like, how sustainable is that going to be, right? I mean, when is it 25% appreciation normal? It's really never been, right? So, but it's still out there. People are able to take advantage of a lot of the equity that's being built up in their homes, right? By selling, buying something new, bigger maybe, if they can find something. But that's still the issue that Nate had brought up earlier. It's that fact of affordability. You know, I might be mortgage ready, but can I find a house to buy, right? Now, I want to be clear. I don't like being a talking head in the room, so I encourage you guys to please talk to me. Give me any feedback, okay? Can I get it okay? You guys can talk to me today? Okay. All right, good, excellent. So, I want to talk a little bit about the mortgage-ready population. So, we have a very strong analytics team here at Freddie Mac, and what they did is they kind of scripted a profile of what a person would look like, and then did the research on that, on those type of individuals. So they targeted an individual that is 45 years or less in age, that had particular parameters. In the mortgage-ready population, they had a credit score of 661 or greater. They had a debt-to-income ratio less than 25%. There were no foreclosures or bankruptcies in the last 7 years, okay? And no severe delinquencies in the last 12 months. So this is just a profile of what a person would look like. Not really, it's not underwriting, it's just really what it would look like. So when they went into the credit files, pulling out those type of individuals. For the near mortgage ready, it would be those individuals still under the age of 45 with a credit score between 600 and 661, debt to income ratio still at that 25% or less, with no foreclosures or bankruptcies in the last 7 years, okay, and no severe delinquencies in the 12 months. The not currently ready would be less than 600 FICO. Right, a greater than 25 DTI, and either a foreclosure or bankruptcy in the last 7 years, okay? And possibly a severe delinquency. So that is the criteria that we built. And this is what we came up with. How many are mortgage ready, and broken it down by ethnicity and race. So overall population, that mortgage ready population at 41.1 million mortgage ready individuals. That's the overall. That's pretty huge, using the criteria that, that I just outlined. That's pretty huge. The near mortgage ready, 13 million near ready. So this is where I challenge you guys. So I'm sure when you get a client that's coming to you as a real estate professional, you know, first thing you do is you're going to send them to a lender, right? So that they can get that pre-approval letter, right? Before you start showing them a property. Is that pretty accurate?
Yeah.
Yeah. So what if you happen to, they're sitting down with that loan officer to get that pre-approval letter, and they come to find out, you know what, and they're so excited because it's just ready to buy a house. But just to find out, you can't quite do it now. What do you do with those clients? I'm asking you, what do you do?
Babysit.
I'm sorry?
Babysit.
Babysit them? That's great. Educate. Excellent.
Lift their spirit up.
You look there, yeah, because you know what? Words really do matter, right? So if you've got a client that's coming to you to buy a house and they're just so excited, and just to find out they're not ready right now, nope, go away and talk to you later. No, you don't want to do that. You want to keep them keep them motivated, right? That is so important. And that's where, I went to a housing counseling conference probably 3 or 4 years ago in Minneapolis. And one of the guys on the panel, he's like, I never tell anybody a hard no. It's always a soft yes. Always a soft yes. Because, I may not be able to get you in a house today, but you know what? Let's work together and we can get you there with some work and some focus, taking some education, right? That's what's so critical and so important. I know Nate was talking about education. It is all about educating these consumers because we don't know what we don't know. None of us, right? So they may have that perception, I can't get in a house. So keep them engaged. And it's also really critical too, in my opinion, very important to have a relationship with a strong housing counseling agency. Because if you have those people in your corner to help you with that education and help your clients get them mortgage ready, who's going to be the hero in the room? You guys, right? That's what it's all about. And when you get them in the house, guess what? Who are they going to tell?
Everybody.
Yeah, they're going to tell everybody. And that's more business for who? Right? Well, we know that there are some challenges in this space as well. There's a lot of challenges when it comes to the first-time home buyer. So many people, and let me ask you this. Every time I go out and I speak in person, I always ask, how many of you have your clients tell you, well, I have to have 20% down to buy a house?
Ready?
All the time, right? No, that's again one of those myths that we have to dispel. It's one of those perceived things that we have to get by, and we have to make sure that people are educated that no, they can get in as little as 3% down. Now, when we start talking about, potential first-time home buyers, and we're looking at that 25 to 45 age range, right? Now, typically, our research is showing that that group tends to be more educated than maybe the boomers or the Gen Xers, right? Could be more educated. But you know what? When it comes to financial proficiency, not so much. Not so much. They don't understand it because it's not taught in school. It's not taught in school. And that's where it's so important, again, making sure that they are. And as we have it broken out here, on average, 50% proficiency. As we have here, Asian at 56, African American, 34% don't have financial proficiency. White, 53, Hispanic at 36. So our Latino, our African American friends, we've got to get that education piece out here so we can dispel all of these myths to help people get into homes. Another piece is debt. And a lot of folks may be thinking that I can't get in home, I have too much debt. But it may not be as bad as they think it is. That's where it's important for them to sit down with a lender they trust and that can work with them, because you'll be surprised at how much fluidity there is and how much ability it is to get people approved and qualified into a mortgage. Because I may think, oh my God, I've got this debt and I'm not going to get a home. It's too much. One of the big things, you know, student debt can be a big issue a lot of times too. It's where it's also real important to know how much is being counted towards student debt when it comes to qualifying. So Freddie Mac, we can only use either the payment amount that is on the credit report or 1/2 of 1% of the outstanding balance. Not 1% like other agencies that are out there. So that can make a difference in getting somebody into a home. Big time, right? What do you think about that?
Excellent.
All right. Well, we do have some solutions on helping your clients get into a home. And talking about those 3% down programs, we have 3 of them. Our signature, which is our Home Possible, and Home Possible is income delineated at 80% of area median income. But what if your client that you're working with still wants to get into the home only with 3% down, but they make more than that 80% of area median income? That's where Home 1 picks up. Home 1 picks up that because there are no income delineations on that. And then, of course, our supersized is our HFA Advantage, and that's the one that would be offered through, like in Illinois, would be offered through IDA. And that one is the most competitive of all the 3% down programs that are out there, because it has the charter level mortgage insurance, which is going to be like half the price would it be for a standard conventional 97 product. And all the delivery fee, those loan level price adjustments you guys here talked about in the industry, those are all waived too when it comes to the HFA program. So again, great products, all of which are very good to be utilized. Talk to your lenders to find out more about those. I can certainly answer any questions that you have.
I still don't understand the difference between Home Possible and HFA Advantage.
The difference between Home Possible and
Yeah.
HFA Advantage,
They're all
little-
3% down, conventional.
Yes, they're all 3% down. So I'll talk a little bit, let's talk deeper about Home Possible. So Home Possible, oh, and I forgot, here in Chicago, the Chicago area. So Home Possible, you can do a 97 loan to value, 1 unit property. 2, 3, or 4 unit property, you can do at 95%. 2, 3, 4 unit property, Home Possible, 95%. That's huge, and especially in this area, because we know all through the Chicagoland area, huge, not population, but huge inventory. Thank you. That's the word I'm looking for. Of 2 to 4 properties.
Well, that's wonderful, because everybody that I've talked to has said for the 2, 3, and 4 units, even conventional with pretty good credit, everybody's still right now saying 15% down minimum.
Nope.
So,
Now, we did, at a point, I will say, we did pull back, but to 85, to having the 15%, but we just, in November of last year, went back to having Home Possible at 95% on those 2, 3, and 4 unit properties.
so the Home Ready, the previous screen where you had the Home Ready,
Not,
they can all get that.
yeah,
This Home Possible.
mortgage
On a
ready, the
4
mortgage ready,
4
yes,
unit, 5% down.
yes,
Really?
yes.
Is there a restriction if it's a legal non-conforming property, which we have a lot of?
You have to follow the guidelines, so whatever the appraisals are, come back in, yes, you have to follow those. Yes, sir.
Glad
Fine,
you asked that
fine.
question, and I'll tell you, I was gonna speak on this when I get up there, but this is where I think the biggest opportunity is. As a realtor, there's a ton of programs out there, but I don't see, when I meet realtors, I'm not sure they're aware of these programs or how they work. And we're always dependent on like an LO or a banker to give us that information. But in my opinion, if you're a realtor and you're interested in this type of program, you have to know the ins and outs of this program to be able to educate persons to meet
Yeah.
those clients, and then you introduce them to a broker or to a partner or a lender, but you need to know the ins and outs of these programs. So I'm so glad you asked those questions.
Yeah, I would like more
Because in this
detailed
example,
information on.
you don't need
Absolutely.
50% down,
No,
you know?
5% for 4 unit can't be beat.
Right. Now, I do want to point out, it is area median income, so it has to meet for home possible, 80% of area median income.
Okay, all right,
Okay.
that's most of our
So,
clients here.
yeah, so I know we get asked a lot of time, do you have to use the rental income from the properties? Okay? If it's gonna put them over the 80% of area median income, and they don't need it to qualify, you don't have to use it.
Okay, there's, you know, a few things to look at there.
Yeah, it's like Fawaz said, it's all a matter of you need to work with a lender that knows how to utilize the programs.
Yeah.
And to your advantage, to get your clients into homes.
Yeah, this is good information.
Excellent,
All
excellent. And so the difference here coming to home one, this is only 1 unit property. Okay, you can't do 2, 3, and 4 unit properties, and there is no income limit here.
right. Okay, all right.
Okay?
So the home possible is income limit, and so is the HFA.
HFA Advantage. Now, the HFA Advantage, you know, that's set by the specific HFA.
Right.
So,
Okay.
excellent. And you do get reduced mortgage insurance, which is going to make a big difference.
How
And-
significantly different is it? What is FHA right now, 0.85?
Well, when you talk about FHA, now that's a whole nother animal because so many people think, well, I'm working with an LMI borrower or a first-time home buyer, I gotta go FHA. No, you don't. Because FHA, and I'm meaning no shade to FHA, FHA is a great, great mortgage. It really is. But if you've got a better option,
Right, right,
why not do that for your client? Because you have the 1.75 MIP
yeah.
that has to be financed in,
Uh-huh.
right? And then you still have a monthly payment on top of that.
Okay.
And how long is that on the mortgage?
For a life or a long.
Forever,
Yeah.
right?
Yeah, it makes a big difference.
For conventional, you know, you have it for a bit, but once enough equity is built up, it can be canceled.
Right, right.
So just some things to make sure that, that you're aware of and how that all works. It's really important when it comes for your
Yeah.
clients, right?
Now, hopefully we'll get more detailed information on that. I'll have to look that up. Are they gonna give us a write-up on your program?
We can. I can follow up with all of that. I can certainly get you some fact sheets on that. I can forward that over to Alex and Nate, and they can distribute that out to everyone. How about that?
Yeah, that'd be wonderful.
Thank you so much.
Yeah.
Okay, perfect, perfect. Here, we've been talking about the differences here already for the difference of going FHA versus the conventional, so.
Yeah. So these programs are less MI than your regular conventional program?
Correct. For Home Possible and HFA Advantage, yes.
That's
For
great.
for Home One, it's gonna be your standard
Your standards.
standard MI coverage, yes.
Okay.
Mhm. So, I'm sorry, so no. Okay. Awesome. So, there's another option out here too, because we know that, especially in the Chicagoland area, the housing stock is a little old, right? A little old. Of course, trying to find homes that you can afford that are decent, that are in decent shape, can be another issue. Millennials are looking for more places to buy. The baby boomers are really aging in place, which again, they're not, it's kind of eating up on other inventory going on the marketplace. So what is one to do, right? What is one to do? We do have our choice renovation. Do you think your clients could take advantage of things like a choice renovation? And you can use choice renovation like with the Home Possible, for example.
Oh, really?
Yes, ma'am. So you would have a 3% down, you can renovate the property.
They build in the renovation
What?
cost into the loan?
I'm sorry?
Built into the loan?
Yeah. Absolutely. Absolutely. So what would happen is for the full-blown, the choice renovation, they can finance up to 75% of the as-completed value. Yeah. And they can do it after closing. So they can go ahead and close on the loan. They have a year
Wow.
to complete the repairs.
Okay, not 3 months, though.
Not 3 months. Nope, you've got a year to complete it. Once, it's from the note date, 360
From the note
days.
date.
Yep. Yep.
That's wonderful.
Yep. Another benefits here, they can fund, because depending on some of the repairs that they're wanting to do, maybe they need to take out the whole kitchen, right? Or the bathrooms, whatever it is they're trying to do.
So the tricky thing is trying to figure out what you're gonna mortgage, because you're gonna mortgage 75% of the renovated value.
Correct.
So that makes, so that's what we have to figure out. They'll need to come down with a little more money down then, possibly, no?
Maybe a little bit,
A little bit.
but you can still work with your home possible, and that's where it's important. You're working with a lender that has the experience with this, so they can walk you through it. You need to make sure you get your plans and specs, all of it done with the appraisal, so all of that's garnered in.
They
Okay.
use a
So-
list of contractors.
I'm sorry?
They have to use a list, a preferred list of contractors.
We do not have a list. The lender may, but we don't, we don't become that prescriptive. We don't become that prescriptive.
So I'm gonna assume the same as previous renovation loans, you get licensed contractors. to
Yes,
get
ma'am.
bids on that. Or one general contractor that does it all, and to get the bids in on the renovation.
Right. Yep.
And that is submitted to the loan officer. Okay, all right.
But they can finance up to 6 months of the PITI, because that's why I say if they're maybe knocking out the kitchen, bathrooms or something, so it's not really livable, they may have to live in a, in a hotel or something until it's
Mom's
done.
basement.
Yeah, or mom's basement, yeah, until it's complete, they can finance 6 months in. So, which is, it's a great option.
So
Now,
they have
and it
no
allows
mortgage
for
payment.
financing in of the soft costs such as the permits, the plans, specs, yeah.
That's a great program.
Yeah.
We got a lot of those loans, a lot of houses that need renovations. So
Exactly.
That would be the number one, loan to get for that. All right.
So the one thing you can't do, I mean, you can't go in and totally knock down the whole building. You can't do that. But,
Rebuild, can't do a rebuild?
no, won't let you do that, no. Oh, I'm sorry, yes ma'am.
Is this geared to one specific town, or can they go to?
You can go anywhere. Yep. Choice renovation can be used anywhere. So some things you may want to think about because, that you may not even have thought about. So you think about renovation, maybe they're buying this house and maybe they want to just add a pool. You think you could do that? You can. But here's your caveat. It can't be above ground, it has to be in-ground type of pool. You can do that as something to think about. I know Chicago has like an ADU program going on, right? For those of you, I don't know how many of you work in the city at all, but, I'm sorry, thank you. Accessory dwelling units, yes. But in the city, but even out here, they could, you could use choice renovation and add an ADU on that property, because think about it, I mean, as our parents are aging, maybe your parents may be wanting to come live with us, but you're like, I have a separate unit though for them, so that way they have their own space. You do that. I think about it this way too. Maybe they've got a garage. The house has a garage, for example, and they could convert that garage into an ADU. So here's where I put on my other hat. Okay, I'm gonna date myself here a little bit. How many of you watched Happy Days back in the day when it was on? You remember Fonzie, right?
Yeah.
Where did Fonzie live? Over the garage, right. That's an ADU. That's an ADU. So they could either do it, maybe they convert it and have an Airbnb to have extra income. Or even just a full-on rental unit. But there's various ways that they could do that to take advantage of the accessory dwelling units. Just another example of how you could use this outside of renovations in the property itself for either kitchens, baths.
I'm surprised that's allowable.
You can't use it for Airbnb though.
No, no. Oh, that, okay.
Second to village requirements.
Building requirements, that's the thing, it's just
Villages.
building to code, that's the main thing. I may have misspoke on the Airbnb, I'm not. But we don't prescribe to if it's an Airbnb or not. What do you think?
I think it's great information.
Anybody else could think you might could use it? Awesome. So now we have like a smaller one, and a smaller version, or what we call Choice Express. And what this does, it finances a lesser amount, up to 10% of the as-completed value. So maybe they just want to fix a bathroom that they're moving into. This one is a shorter time frame. Again, they can do it after closing. You know, they can go ahead and close on the property. This one has 180 days it has to be completed instead of a full year. But this is just a shorter version of it.
I have a question. What are when the appraisers come in and they see a kitchen that's not there, and a bathroom that's missing, and that we're doing this, I mean, are they putting that into their appraisal, and that's how they give the list of what we need to do? And they decide what we need to do, or does
They
the
don't, but
lot-
that's where you need to be making sure that you're working with your designer, architect, or whoever's doing the plans and specs for that, and they need to give that to the appraiser so they can take that into consideration.
Oh, so that needs to be handed to the appraiser before he appraises the house. So the
Because
appraiser.
because
will
again, it
know-
is, they'll appraise it based on the completion of those repairs.
Oh.
Is that right? Does that make sense?
Yeah, okay, yeah. Okay. Choice
Awesome.
Reno.
Awesome.
Reno.
All right. So now let's talk about Borrow Smart for a second. You know, we talk about, you know, one of the challenges that people have getting in a home. What's the number one challenge for folks trying to get into a home?
Getting money, down payment.
Down payment.
Yep.
Yep. So trying to find down payment assistance. So we have a program outside of all these other programs that are out there in this space. We have a program that it's called Borrow Smart for borrowers that could be eligible, right? So up to $2,500 in additional funds that could be used for down payment. You guys like free stuff? You think your clients like free stuff? This is free money
Is that like
for your
certain
clients to be
areas?
able to use.
Is that,
This,
is that for
this-
certain areas or?
for these funds here, 2,500, 1,250, and 1,000, those could be anywhere. Again, it is all income delineated though, because it would be for the very low income, which we call our VLIP, our very low income, that would be $2,500 for those borrowers who are at or less 50% of area median income. Okay? For those borrowers that are between 50 and 80% of area median income, they can get up to $1,250. Okay? For the moderate income purchase, that would be those that are in an area of 80% to 100% of area median income. That would be $1,000. But this is a little more restrictive. It does have to be in a property or in an area, a census tract that is a high needs census tract, which I've searched, there really aren't any in this particular area, or a manufactured home titled as real property.
Oh,
that's the other piece I wanted to put out as well for, I want to go back, Home Possible. Do you guys do any manufactured housing financing? Or sell any
Yeah,
manufactured?
there's a few in the area. I think
Okay.
there's a few. They finance them like regular houses, yeah.
Yeah.
Like
And
a
you can
Wausau
use,
homes, yeah.
okay, and you can use Home Possible for that at 5% down. Yep. So these are really those who the net, that your clients could be eligible to get. Now, they can use other down payment because DPA can be layered. Okay, so maybe they find down payment assistance through DeKalb County, right? $10,000 out there for they may have that the borrower may be eligible for, so they could have that on top of the $2,500 or $1,250. Okay, they can layer that as long as they don't go over a certain, the 105 total loan to value. They can have all of that.
Wow.
Yeah, right? That's good stuff.
Yeah, there's programs out there, grant programs.
And the thing is, because there's a lot of money that can be out there for down payment assistance, it's just knowing where to find it. Knowing where to find it, that's the biggie, right? So other eligible sources, maybe family, gifting them money, other nonprofits or government that, such as I was just talking about, even employers, because right now with so many people trying to hire, that's some of the bennies that are out there too, that some employers are offering, are the employer assistance, being able, for their employees to take advantage of. So that can be included in that calculation as well. So it can be used with other of the DPA programs. Now, it cannot be used, it cannot be priced, like the lender cannot price up for it, put it in the price, they cannot do that. And it can't be used for like the HFA Advantage program that I talked about earlier, you can't use it for that either. So. Now, we do have a tool, and I know that, I believe it was you had asked, is it only in certain census tracts, only in certain areas? The monies that I just talked about, no. But we do have another level that is being announced today of additional money that can be used. An additional, on top of the $2,500, on top of the $1,250, an additional $1,200 or $7,500. If the property is located in a geo-targeted census tract. Now, we do have a tool that our lender partners, this is very limited availability, so it's a first come, first serve. And our lender partners, there are just a handful of lenders that have this. Rocket happens to be one. They have this tool, the Freddie Mac access this tool, Freddie Mac Borrow Smart Income and Property Eligibility Tool. So they can look up to see if that property you have listed is in that particular targeted census tract. Wow. Now, I took the pleasure of going to Century 21 Protein here.
They're affiliated now.
You're affiliated, yes.
Affiliated
Sorry,
now.
I'm sorry.
Affiliated.
Oops.
That's okay.
My bad, my
That's
bad.
okay.
I found a property on the website that happened to fall into this. And that happens to be, if one of you are in the room that has 605 Hermes Avenue listed, that's your property?
Yes.
This is your property.
Yeah, it is,
It is eligible
yeah, for that.
for that
That's good to know.
$7,500.
That's good to know. I think I'll sell it this week.
It's a great tool.
Yeah.
So, again, it's additional, as long as they meet the eligibility requirements, that's additional funds. So that could mean if they are in that 50%.
I actually just sold another one of my own listings last week or week before last. And the lender that's doing the loan for that particular family, said, oh no, they're gonna get this and this. And I'm like, well, I don't know where you're getting it from, but I'm glad because the amount that they needed was a lot less than their first time home buyers, young couple. And it's in that census tract also.
Awesome.
Yeah, and it's great, all they needed to buy the home and it's $235,000 home with $7,000.
Wow.
Somehow, that lender implemented all that in there. Usually that's coming out today, but I think that was available last week, wasn't it?
I will defer that to Rocket. I think it's just available starting today. I'm not quite sure when it became available for us. Today.
Because they mentioned that 7,500, you got it. Okay, I don't know
Okay.
how they did it, but.
Hey, they got it.
Yeah, it's in that track.
That's
Aren't you guys
awesome.
glad you're here today to find this out?
Yeah,
Yeah.
yeah.
This is great stuff. I'm glad that you're here too, so you can see what this means for whoever the buyer is of this property, if they're eligible for it.
That's the area where I was born and raised, so I know a lot of people there, that's good.
Excellent, excellent, excellent. So if I'm a realtor, hey, I'm gonna be checking this out too. So, a little bit about how this process works, because they do have to go through, which is the Housing Preservation Fund to get pre-qualified. You have to meet with a housing counselor over the phone, like an hour of time, that's all it takes.
Okay.
So the borrower eligibility would be determined by your lender. They'll give you the information for the HPF, the contact to be utilized, and we'll be determining that qualifying income. That's what's going to determine their eligibility. HPF will collect the contact information, okay, and complete the eligibility review. They will also collect a fee of $99 while they're talking and going through this counseling process, okay? At the end, they'll get a certificate. They'll be provided to the borrower, to your client, and to the lender, okay? So, with that, this meets not only the education requirements for the $7,500 or for the $10,000, depending on that whole bit, right? It also meets the home buyer education requirement for Home Possible and for Home One. So they don't have to then take another class to take that one. Because if they are a first-time home buyer, like for Home Possible, there is a home buyer education requirement component. This will suffice for all of it.
Wow. Okay.
Is the $7,500 a grant, or do they have to pay it back?
Free stuff. It is free money for them. So we do have a few resources, again, and we can share the resources with you, main thing, because you are the trusted advisor in the room. We're just here to give you more tools so that you are more successful at what you do. But just making sure you're abreast of all the housing trends, like you're here today to find out what's going on in the community, right? What's going on that's going to make me a better real estate professional to my clients. Leverage your networks, because everybody talks and everybody wants everyone else to be successful, right? So network, it's so important. Always engage your clients, because you may be just sitting next to somebody or in line at somebody in the grocery store and just start talking. You never know, that could be your next client, right? So, again, just make sure, because we do want each other to be successful. Share your own experiences within your own organization. This is what I did to make me better at what I do. And I don't even want to go further into that, because I know we've got 2 TED Talkers coming up, and they're going to share experiences on how to be successful in that space. We do have a website called My Home, and this is a consumer-facing website, so because we know it can be a challenge, even for those of us that have been in the industry a long time. What can I use? What tools can I use to help me be successful, and what to expect as a client, as a potential home buyer? This is a great resource for that. Down payment assistance. This is a great website for you guys to tap into as well, to see what down payment assistance might be available for the homes that you have listed, So if I'm a real estate professional, I might be going in and looking up these listings that I have, see what DPA could be available in that market, create your flyers, on top of the Borrow Smart to see what's out there. Great, and it's free for you guys to use as well. Our Credit Smart curriculum, this is our signature financial literacy tool. It is phenomenal. Yes, I'm a little biased if I say so. It's 20 years old. We revamped it last year, but it is a phenomenal tool. It's the Essentials, Credit Smart Essentials, which helps your client to be educated through the whole process, even to the minutia of things. What's the difference between a want and a need? How to develop a budget. You know, what should I be expecting through this? How to save, how to do this. And you know, it's a great, great tool. We have our Credit Smart Homebuyer U. This is a tutorial that we have that meets the homebuyer education requirements for Home Possible, Home One. It is in English and in Spanish as well, available for your clients. They can listen to this once it's completed. They get a certificate, and the certificate is good for 1 year. Credit Smart Coach. Let's say some of you want to become a certified trainer or facilitator for Credit Smart. You can do that through Credit Smart Coach. We will be offering again to become a facilitator in fall of this year. So if you want to start checking out our website, like September-ish, because I think I heard October 1, it's when that cohort will start. Credit Smart Military. If you're looking, if you're working with some military folks, you know, we do have that particular module that can be utilized because they do have a different speak. So it'd be used in conjunction with the regular Credit Smart curriculum. And then we do have various languages, other as well. So this is our Credit Smart Homebuyer U. We already talked about that. Real estate professionals in the room, register. Here, subscribe to our resource center because we do send out newsletters every so often. Highly recommend that you guys subscribe to this to get advantage of everything that we put out in the marketplace. As you're driving from showing to showing, download some of our podcasts and listen to those as well because we do issue those out quite a bit as well. At the end of the day, again, it is all about you. We were just invited to the table today to bring you these tools so that you can be more successful. But with this, I've done a lot of talking, and I'd like to bring up a buddy. I'm going to bring up Fawaz, and we're just going to have a little dialogue here for a second, if you guys can indulge us.
Round of applause for Sandra. I think you shared a ton of great information. A lot of info. I'm glad that I sat through this, so thank you. Good morning. How are you guys? I want to thank you guys for joining us this morning. I know it's not easy to take time out of your day to come up. I know how hard it is. I also want to thank our partners. I have our broker partners in the room. Allied, if you guys can stand up. I appreciate you guys coming up today. Allied is our top 3 partners. Allied is ranked top 3 in the country when it comes to broker business. So they do a ton of business. We appreciate you guys. I just found out they're only 4 miles away from here.
Oh, wow. Nice.
Appreciate you guys.
I'm good. How are you doing?
I'm doing great. You shared with us a lot of information, a lot of free money out there.
I know. One of my favorite 4-letter words, free, right?
Yeah. I love free too.
Yes, yes, yes. So, you know, we talked about a whole lot of stuff
Yes.
up here today, right? And we know that there's a lot of issues in the marketplace. And as far as housing supply and affordability. And it's especially challenging when it comes to those LMI borrowers trying to get into a home.
Yeah.
So what are some of the primary challenges that you're seeing out there?
Yeah, good question. Before I get into your question, I'd like to just introduce myself because what I want to do today is I'm going to share with you some of the things that I've learned in my journey in the last 12 years. I've been with Rocket for 12 years. I was on the retail side for 6. In the last 6 years, I actually lead the sales team for Rocket Pro TPO, which is our wholesale division. So I work with brokers across the country. I work with realtors across the country. And in the last 18 months, I've personally spent time on the road meeting with brokers and realtors, having conversations about the market, about things that we can help them to grow their business. So what I will share with you today is just things I've learned in the last 18 months, whether it's from brokers or top realtors in the country. And that's what I would like to do today. As far as your question, this is a good question. We all know inventory is hot. Supply, it's low, and when a home go on the market, you're getting 2, 3, 4 offers, and we continue to see buyers overbid on properties. We continue to see that. I don't know how long more it lasts with the interest rates going up, but as of right now, we continue to see that. But I'll tell you, one of the things that I see a ton of top realtors in the country do, and they find success with, is they find time to actually educate their borrowers, their home buyers. They're spending time with them prior to submit an offer. And that time is spent, whether it's in looking into their credit score, helping them improve their credit score, whether it's helping them put plans together to save money so they can qualify for a bigger home, whether it's like really just pre-qualifying them up front to see where they land from a debt to income ratio, and figure out how can we get them to as close as possible to qualify in the next 2 to 3 months. We can all agree, hopefully, that not all of your clients are 740 score and a ton of money in the bank. You have the folks that are at 640 and 620. Some of them are at 580, and it's not because they want to be a 580. I was a 580 at one point in my life. Things happen. But the successful realtors are the ones that are really finding time and spending a ton of time with those clients, helping them, preparing them. So when they have an offer, they actually qualify for that offer. And I'll tell you, in my opinion, the folks that you spend a lot of time with, the folks that you actually invest in, those are your referrals for life. Those are the folks that will always speak about you, they'll always sing your praises, and they'll always, always refer to you, every single person that talks about whether buying a home or getting a second home or an investment property. So spend the time, that's in my opinion, especially in this market, you gotta invest the time.
Excellent, great points. And my bad, thank you so much. That should have been my first question, is please introduce yourself. So thank you for that, Mike. So as we continue on, I mean, we know that real estate professionals do have challenges out there as well, trying to get either down payment assistance, trying to get these borrowers, these clients to the finish line that's what they call. So can you talk through some of the pitfalls and benefits?
But it goes back to, I know we're all busy, but how much time are you spending to get data on those products? And how much time are you spending? And how knowledgeable is your broker, your banker, your loan officer? How knowledgeable are they when it comes to these programs? Not everyone is a 740. I say this all the time. If you're a borrower, if you're a realtor or a broker or a banker, and you're only going to focus at 720, 740 score with thousands of dollars in bank account, you're missing out on a big, big chunk of where the market is at today, especially in this economy.
Absolutely. So tell me, Fawaz, I'm a real estate person sitting here in the audience, and I'm like, yeah, I want to find out some more information about that extra $7,500.
Yeah.
To help my client get into a home. Who do I reach out to at
Rocket?
At Rocket, yes.
Good question. So you simply have, if you call, are trained on the information. So any one of our bankers that you call to speak about, they'll be able to give you that information. We also, because I gotta make sure that I represent my broker partners as well, we also run trainings for our broker partners. So when we offer a product, when we go out to the broker community, we say, and we have almost 10,000 brokers, almost 45,000 LOs. When we say, hey, we have a new product for you, we have a new program, we're actually investing the time. We do webinars, we do sales training, we do recorded training, and we make sure that our brokers are also educated on having that conversation. So whether you're partnering up with a local broker in your area that's partnered up with Rocket, or calling just our 800 number to speak to a Rocket banker, you should have an educated conversation, and someone should give you all the answers you're looking for. Because our goal is that when they speak to you, they know the ins and outs. Just like I want you to know the ins and outs of how these programs work, we gotta make sure that our bankers and our LOs and our partners are aware of the ins and outs of every part of these programs.
Awesome, thank you so much for us.
Appreciate it.
One last question for you as we close out. So I know all of these agents came in to find out more about how they can work better with LMI borrowers, low moderate income borrowers. What 3 best practices would you throw out for these folks?
3. Educate yourself. truly know the ins and outs of every part of these programs. I'm not saying make this just your focus of your business, but this is a big chunk of our business today. Almost 70% of the buyers out there need some sort of help. Educate yourself on how these programs work. Pick the right lender. Research. Figure out who are those lenders are or those brokers are, and do they deliver on these programs? Are they able to take a borrower from step one all the way to the closing table? Do they know how to deliver that? And I think the last one is brand yourself. Like, especially when you close these hard deals, those down payment assistant deals or whatever it is, you gotta ask for referrals. You gotta ask for reviews, because you take those reviews plus that knowledge that you are gonna educate yourself to know about these programs. Those are two powerful tools that will help you when you're submitting loans, offers, when you're submitting these offers. These are the two things that can help you obtain more offers, especially in this market with low inventory.
Awesome.
Yeah.
Thank you so much. And thank you guys so much, for allowing us to come and have a conversation, talk to you about what we have in the marketplace. And that, before we close everything out, I'd like to bring
We have a few minutes for questions before the next portion of our program.
Does Freddie Mac have any resources that we could give local governments, municipalities? Because one thing we're finding is we'll have constituents say, well, we need some more affordable housing options. We have a municipality that doesn't have zoning regulations and requirements to build affordable housing, stuff under 1,800 square feet, in most municipalities out here, that prevent that from happening. And then you have the NIMBYs, the not my backyard folks, that go to these village board meetings and stuff that, kind of speak against it. But, as realtors, I'm gonna, go to a meeting here in a couple of weeks about some apartment building in my town that they're proposing. And I'm sure there's gonna be a lot of pushback on it because, that's, gonna attract low-income borrowers. But we have, I guess it would help to have something like from Freddie Mac and Fannie Mae or any GSE that would say, hey, here's why you should look at your zoning laws, look at your regulations, because we have 41 million people that are mortgage-ready borrowers. They could be living in your town, but you're preventing that from happening.
Well, we are in conservatorship, and so we cannot do any type of lobbying in that kind of perspective, right? We are working on, we do have our equitable housing plan that we have just released 3 weeks ago. But we do realize the importance of all of that. And unfortunately, I don't have anything that we can share in that space to the level that you're asking. But definitely some feedback that I can take and share with my team, see what we can do.
Any other questions?
Here's your chance, guys.
How could we get a tea time with Ricky Fowler? Wasn't he having country with
Yeah, I had a tea time with Ricky Fowler.
Is that right?
I've never golfed in my life, and the first time I actually got on a golf course was with Ricky Fowler. Never golfed in my life.
Yeah.
He made fun of me a little bit, but he's one of the coolest people. We can figure it out.
Yeah, I thought it was great. The information that you gave today was really wonderful.
Thank you. Thank you.
Awesome.
The Rocket,
Go ahead. Who are our Rocket mortgage representatives in this area, in the Aurora area, Montgomery, Oswego? Is it you, is it a group that you have out?
We have a ton of, so I represent the wholesale side of Rocket, and we have a ton of brokers that work directly with Rocket. I mean, we have broker partners right now, Ally. They're partners of ours, so you can work with them, or you can call Rocket. But since we have folks that just right down the street, I'd highly recommend you work with these folks here.
You guys are in the area here?
Yeah, 4 miles away.
We're in Schaumburg, but
Here in Schaumburg?
actually, it's right down the street.
Yeah, and I'll tell you guys, Ally, they're licensed in all 50 states, and they do business with us, so you'll be able to have access to all these programs as well.
So we have the relocal people moving to Texas and Arizona.
For sure.
Any other questions?
She had one.
Based on your data, when you said the less educated or lower educated, how can we get these type of programs in the community to educate certain, people of color? So can you come to an area like a church or something, or someone giving a program to educate the body?
We can, but we can also, we do have some,
We can help out with that also.
yeah, they can help out. I'm sorry, I see a comment here, another.
Yeah, we're currently building a new page where we're gonna have access of all these programs for minorities, right, and low income clients, where we're gonna have all the programs that we offer, from Borrow Smart to any other of the down payment assistance that we offer. So we'll make sure to stay close with Alex and send it to you so they can forward that link and they can have more information. Because we understand, right, I was also a loan officer myself, we understand that education is important. Specifically when you have clients that are Black African Americans or Hispanic, right? We come from we have other things that for us are important, right? In our families. So we know that education, not only about how to get your credit right and why it's important, but why it's important not to save money under your bed and put it in a bank, right? This is the truth. That's how we do it, right? It's a we're African American. So we want to make sure that we have the right tools for our clients. So I'll make sure to stay close with Alex and share with you.
Part of it is a lot of them, they don't know what the programs are
Yeah.
for them, so they automatically say, I don't have 20% down mine,
Yes.
they don't allow me to do that, so they don't even come in. But if they know the programs are out there for them, then they can start maybe to educate themselves and save them a little from that.
Even partners that work in the real estate space come to me and say, well, actually my clients don't have 20%. I'm like, well, we have like 3%, 3.5, right? There's other opportunities, right? So yes, education is not only for the clients, but many people in the real estate business still need to understand that there's opportunities for these clients.
We will make sure that your slides and everything you share today are sent and emailed out to everybody, and along with contact information, so you can make these connections. Did everybody find something of value that you can use to help your clients and grow your business? Raise your hand. Round of applause for our friends from Freddie and Rocket. Thank you so much. Thank you.
All right, so we are going into our next section. Thank you again, Sandra. It was, you know what, before we get started, we have a commercial, a little video that we're going to play.
So before I start, put a pause. So before I start, we're going to just share 2 videos that we have from Rocket Mortgage. This is strategy, research, and communication to our African American and our Hispanic speaking audience. Just want to make sure that we share with our partners that we really understand who are we speaking to, right? It's not the same just doing a commercial for the general market and thinking you're talking to everyone. Each group has an individual specific needs. So we just wanted to share those spots with you.
Just a year ago, she wasn't sure she'd ever be able to buy that house, but Rocket Mortgage helped open those doors with loan options to fit her needs. Some was as little as 3% down. Valerie took the first step in becoming what she dreamed of being most, a homeowner. When it's time to buy that house and make it home, Rocket can.
A mi marido le encanta el fútbol. El problema es que hay partidos todo el tiempo, todos los días.
¡Gol! ¡Penal! ¡Sí, señor! ¡No! ¡No!
Había que cambiar el juego. Llamamos a Rocket Mortgage, con quien pudimos refinanciar y obtener un desembolso en efectivo, cash out, para remodelar la casa.
Nos pusieron en buena posición y ahora tenemos espacio de sobra.
Al final fue un golazo.
Si quieres ampliar tu casa, Rocket puede.
En esta familia todos tenemos sueños diferentes. A Andrea le gustaría ser futbolista. A Armando le gustaría ser ingeniero. Y Anthony, el próximo Tito Fuente.
Y a nosotros
Nos gustaría darle a cada quien el espacio que se merece. Así que llamamos a Rocket Mortgage y nos ofreció un préstamo con un down payment tan bajo como 3% y nos acompañó de principio a fin.
Si tu familia necesita más espacio para soñar, Rocket puede.
All right, let's give him a round of applause. See, Rocket with it. That's great. Awesome. So we have two more speakers here for you. And the information that we've had thus far this morning has been phenomenal. So thank you for our speakers and the presentation. And I remember 3 years ago when we did this before, all of this information truly helped our agents make a difference in the field. It's important that we're educated, that we understand what the tools are to our disposal, and that we can be a good liaison to our lender partners. That's how deals happen. And the little bit of knowledge that we can get from programs like this make a huge difference in what you do in the field. Like we were talking about this morning, the American Dream of Homeownership is alive. And if you look at organizations like NIRA, the word sustainability is really the key word here. We're building a foundation, not just to be able to have homeownership, but to build life for your family and have sustainable and generational wealth, and that each generation can elevate from there on. And it happens with us. I remember selling homes to families that had babies in their arms, and 30 years later, I'm selling that baby a house. And that's really what we do, and programs like this really make a difference. We're talking about how these incentives and programs are dollars and cents, but they mean the world to buyers when they're getting into homeownership. So, with that, to go into our next segment, we're going to have a TED Talk style presentation. These two speakers are people who I truly admire. The first speaker is Mabel Guzman, who is a past president. Her resume is quite, we could go on for like about 15, 20 minutes, but her commitment to the industry, I think, words like ambassador for all of us, no matter what company you're with, wherever you are, whether you're a realtor or a lender, this is an individual who is out there, who has a voice for the industry. She has testified before Congress for expert testimony, and that's just the level of practitioner that she is. Now, that level of expertise aside, her passion to help.
Remember, we're going to the holidays. Let's break this payment up. So we did that. Every member would receive calls, at least 50 a day, and they said, "Thank you. You understand what we're going through." Do you think that made a difference? Yeah. And all it was a suggestion. And all it was me saying yes to Alex Shapiro, which then his fault. I ended up being the treasurer the following year, and I just said, we need to do something. So it made a difference. And as I look through the path that I've taken, even with Illinois Realtors, Government Affairs Director there, and that was fun. We talked about taxes and how do we educate our members and actually the consumer. And we put out a whole tax piece, and that was saying yes again to my association. Right? We can make a difference. As far as like my testimony in Congress, it's really kind of interesting that they asked me about flood insurance. Did I know anything about flood? I was like, I don't know anything about flood. Oh, that's a lot of water. Really, basically, I know. But then I started talking about urban flooding. I started talking about how I understood the coastal areas because I had family who lived there. And they said, you know what, you're going to be great. We want you to go before the House Financial Services Committee and talk to them about this. And I said, awesome. So I started looking more into the law. I started looking into all the challenges that all this face, because it does flood in Illinois, let's face it, right? Actually, water is everywhere. So when I get before Congress, I had lunch with a girlfriend, and she said, what are you doing? And I said, well, tomorrow I gotta get on a plane, and I gotta go testify on flood insurance. She goes, well, what is that you want them to get out of it? I said, I want them to get out of it is that it needs to not only be improved, but also that we need transparency. Because I can't look at the historical record on a property to find out if it flooded in the last 20 years. I only know the last 3. That's it. technically don't have to tell me that, but I can look it up. But she's like, why can't you look it up? When I bought my car on Carfax, it let me know everything about my car. I go, yeah, precisely. I can find out everything about a $40,000 purchase, $25,000 purchase that I'm gonna be driving, but I can't get that information on my home. That's pretty messed up. So I shared that story with him, and I said, you know, if we have Carfax, why can't we have House Facts? Right? Why can't we get that deep dive? What is keeping us from getting there? There's just a change in the privacy. So they loved it. Nothing came of it. It was 2019. But they did change some other things, and then we ended up with a new rating system on flood for FEMA, which I had the pleasure to sit in those meetings, and that affected change, where the system now is much more equitable. By the way, people in Illinois on average were paying $745 for their flood. In Florida, they were paying $545. Yeah, I was like, F up, you know, so I actually did say the word. But anyway, I'm very much a sailor from past life. So I said, that's really messed up, because really, honestly, that is not equitable. How is it that a state that has those issues, and yeah, we have those issues too, but there needs to be equity. So guess what? They changed the rating system based on all the feedback from a collective group of realtors from across the country, myself included, and we made that change, right? So that change turned out being that now they have a rating system that is equitable. Guess what? 45 states, those folks saw reductions in their flood insurance. Do you think that made a difference?
Yes.
Absolutely. I'm sorry, did that make a difference? Okay. I'm trying to wake him up. No.
Me?
So those are all things that, you know, I took an active role in, because I said, you know what, I don't want to sell, you know, list and sell. I actually want to make a difference in this industry. I want to, you know, when we had a discussion yesterday, Alex is like, you're really passionate about this industry. You have like, you stake a stake in this game. Not stake like T-bone, but a stake to like a plane. So, and I do. And I think it's really also comes to background with my family. You know, I remember when my parents bought their first place. We immigrated from Cuba in 1967. I came here as a little girl. And I remember the experience of leasing, which was not great, and also buying, which also was not great. Think about that. Two negative experiences that really need to be positive experiences. So I remember my parents speaking in the night. I remember seeing the property too. And the lady was kind of rude to us or whatever, but my mother didn't really care. Our realtor, Isabel Rodriguez, was awesome, and she advocated fine for that. I have to make the time. And it's not like you have to join every meeting in the world, but I think it's important to find what you're passionate about. What is it that Main Street is doing right now, and what committees they have that you could be part of, that you can say, you know what, I have a story to share. And I think this is going to be a positive impact for my clients. I'm also very fortunate and blessed to be the Vice President of NARIP for DuPage County. So NARIP, National Association of Hispanic Real Estate Professionals. And we have 40,000 members nationwide, and our chapter is actually growing pretty quickly. We're actually now like far exceeding our efforts, which is very great. And some of the content that we deliver is really also understanding that Latino market. When I looked at that, I was like, holy crap. We actually achieved generational wealth. I was able to help my son extend into his, now he has an asset, because we know that real estate is that one asset that helps you on your pathway to wealth, right? So now, we now created a generation of wealth. He is going to do something. I know my grandchildren will, or for damn sure they will. So that was all based on not only my involvement, but it's also the understanding of the business. It's more than just X's and O's. It's more than just understanding finance. It's also understanding laws. Matt, you brought up a great idea, right? Let's get the data, right? We can go, how many municipalities are there in DuPage that really impact people's lives when they can look back and see the 20-year history? Right? So I just want all of you to take from this, I mean, the knowledge that you received today is meaningless unless you apply it, really. You know, they say knowledge is power, but if you don't apply that knowledge, it's nothing. If you apply it, it's huge impact, not only on your life, but on the lives of the people in your community. So please, please, like, talk to Michael Goddard, right? He is talk to Matt. How do you get engaged and involved at your local?
Well, it's I gotta tell you, it's refreshing to meet a fellow practitioner who has made his life's work, his dedication to putting that into action. He has the best social media of any realtor that I've ever seen, but putting that aside, the message is extraordinary. So without further ado, Sean, let's give him a applause.
Is it okay if I use the mic, guys? I'm very soft-spoken. All right. I am excited to be here. I'm excited to be in a room full of amazing, phenomenal agents. I'm honored, really, to even be in the mix with so many great people. I'm going to be super quick. I'm not going to be long. I want to talk about the authentic growth of business, right? So we're all in the room to determine how do we grow our business? What are some tips, tools, and resources we can use to grow our business? Before I do that, I want to talk about how I even got into real estate. Prior to being in real estate, I was in healthcare for 9.5 years. I worked in the laboratory. That's how I was going to retire. I was going to get a house in Florida when I turned 60 and never come to Illinois again. I was going to be the suburban dad at Menards every weekend buying stuff that I didn't need. But what ended up happening was I bought my first home. My wife and I bought our first home, and when we did that, during the process, I kind of felt like we were underrepresented, if that makes sense. But when I did my homework, the way we were represented was of the norm. It was of the norm. And it was mind-blowing to me that you could get better service at a $200 a night hotel than when you bought a $200,000 house. You didn't go to a $200 a night hotel, you call for extra towels, boom, the towels are there. You buy a $200,000 house, you're lucky if your agent gives you a call back. They text you back, they can answer your questions, they get you what you need. So when I got into real estate, I had one goal, one objective. I didn't want to sell $1 million worth of homes. I didn't want any accolades. I just wanted to set the standard. That's all I wanted to do. When I got into the business, there was a very reputable agent. Very well-respected agent, that gave me 3 pieces of advice. He said, first thing is go by Sean. Don't go by Rishon. Take that first syllable off, just Sean. It's nice. It's more corporate, you know, it's a little bit more clean. Go by Sean. Okay? Second thing he told me to do was to wear black suits. Get you a ton of black suits, wear you black suits. Third thing he did was he told me to be clean shaven. No facial hair. You want the corporate look. You want the corporate look, you want the Wall Street look. As you guys can tell, I didn't take any of that advice. I thought about it though, if I'm being very transparent. I thought about it. But here's the thing. I learned that there are currently over 7 billion people in this world. The data says next year there'll be 8 billion people in this world. And what I realize is that there is no one like me. That's the message I want to share with you guys. There is no one like you. And so if we take this copy and paste mentality that I see what's happening for Maribel, I see what's happening for Martha, I see what's happening for Matt, and that has to be how I run my business. I have to do exactly, you're doing a disservice to yourself. Because I don't want to work with a copy and paste version of someone. I want to work with the authentic version of someone. I want to know that I'm working with someone who is real, who is relatable, real. They're a real person. They're authentic. So, I'm going to tell you this story. We were in our office, and my desk was right next, when I first got into the business, my desk was right next to another agent who had been in the business for a very, very, very long time. And I heard her slam the phone down. I said, is everything okay? She said, yeah. 6 years ago, I sold a home to a guy, and he just listed that home last week with another agent. And I called him and I said, why didn't you call me to list your home? And he says, oh, I'm sorry. I didn't know you were in the business. I didn't know you were still in the business. She says, when I told him, you could have at least called me to ask. And it was that day I said, no one will ever have to wonder if I still do what I do. No one will ever have to ask, are you still in real estate? Do you still sell houses? Because not only do I want you to know what I do, but I want you to know that I'm the best, in my opinion, at what I do. And a lot of times, people are saying that I don't want to overmarket myself. I don't want to overbrand myself. How many people have been in a McDonald's drive-thru? How many people have had a Big Mac, a double cheeseburger, fish fillet? Matter of fact, their sign used to say over 99 billion served. However, we still see McDonald's commercials. Why? Because they want to remain relevant. JG Lawyer is the lawyer for you, called 222-2222. We see these things all the time, but for some reason, as a small business, as a realtor, as a real estate professional, we think that, oh my goodness, I can't market myself, I can't brand myself. People are going to get tired of seeing me. People are going to get, they don't want to know all the time that I'm out selling houses. Yes, you do. You want to know that I'm selling houses. So it was that day that I decided that I'm going to pivot my business. I had started doing spending thousands of dollars on lead generations from sites that will remain nameless. I'm pretty sure you guys have heard of them. You guys get the calls. And I started doing that. And then I got to an end of the year and I said, okay, I need to pivot, right? I had a conversation with a gentleman and I was talking to him, and something that I said to him opened my eyes. He said, what is the best thing that you think that I could invest in? He said, there's so much. There's stocks, there's bonds, there's now Forex and NRGs and housing. I told him, I said, the best thing you can invest in is you. God is not making another you. And so it was that day I said, okay, I'm canceling all of these lead generations. I'm investing in me. I'm bumping up my social media presence. I'm bumping up my content because I really want people to understand who I am as a business. I never want to rely on someone else to pay my bills. I never want to rely on that call from someone saying, hey, are you still in the business? No, I don't want to rely on that. I want to brand myself and I want to be the best version of me. So to go to the question, how do I grow my business? I have 3 innovative approaches. You can take these back to your office, you can write them down, and this is, in my opinion, some of the best ways to grow your business in 2022. First thing is a project or a challenge I call 52. Raise your hands if you're a real estate agent in here. Raise your hands. Raise your hands if you work at least 4 days a week doing real estate. At least 4. 5 days a week. Jesus. 6 days a week. No days off. 7 days a week. Oh my goodness, you overachiever. 7 days a week, Martha?
Every day.
Every day?
Every day.
You get some rest, girl. You can't pour from an empty cup. Okay. Let's say on average we have 5 days a week. That was the most amount of hands. And you work 8 hours of the day, right? 8 hours a day, 5 days a week. I did a challenge and I invited agents in my office to do the same. Out of 5 days out of the week, work on one client. Work on getting one client. One client that week. Whether it's a buyer, it's a seller. And if you do this challenge, at the end of the year, you'll end up with what? 52 clients. Now, you may have a client who bought a car right before closing, or, God forbid, or somebody racked up the Macy's credit card. You may have that, but at the end of the year, you should have a solid buyer pool or seller pool. So that's the 52 challenge thing. A lot of times people are saying, well, I don't have the marketing budget as, McDonald's or JG Lawyer. How do I find these people? Every individual is a client. Every individual is a client. Even when I go to the grocery store, I make it my business to go in the line and not self-checkout because every individual is a client. I'm talking to the lady at the checkout. Hey, do you know any good agents in this area? And she turns to her coworker, hey, Janet, you know any good agents in the area? And I'm like, no. I whip out a business card. Now you do. Every individual individual is a client. Even, Matt will tell you, even when I go to Starbucks, I have my Starbucks cut there. When I go to Starbucks, they do not know that my name is Rashawn Boone. They know me as Mr. Real Estate. I go to Starbucks and they say, Mr. Real Estate, your Americano's ready. And they, oh, you're in real estate? Yes, I am. Who did you ask her about real estate? Yes, I am. Every individual is a client.